Okay, welcome back everyone. So I'm Sarah Jetta. It's been a pleasure to be moderating this next panel, From Data to Trust, Building Human-Centered Digital CX. We're in an era where data fuels innovation, but it's trust that sustains relationships, especially in sectors like financial services where personalization, privacy, and compliance must coexist. Earning and maintaining customer trust has become a defining competitive edge. Joining me to unpack this are two leaders who live and breathe the balance of this every day. I have Alexander Chan, Senior Director of Analytics at RBC, leading how data-driven insights fuel meaningful and responsible innovation. Beside me, I have Sagar Gill, Senior Director of Products and Innovation at SimCore, shaping how secure and intelligent ecosystems create customer value across industries. Welcome, Alex and Sagar. It's great to have you both.
Thank you.
Sarah.
All right, so we're going to jump right into it, guys. You ready for this?
Let's do it.
All right. So we often talk about personalization as a holy grail of CX, but consumers today expect more. They expect experiences that are human, empathetic, and inclusive. So to set the stage, what does human-centered digital CX actually look like in practice today, especially in highly regulated industries where flexibility can feel limited? Alex, why don't we start with you?
Yeah, for sure. Firstly, thanks for having me. Hi, everyone. I think honestly, in our era, we're hyper obsessed over hyper personalization. Everyone cares so much about getting that right message, getting that perfect, offer, that perfect, pixel. But to me, being human-centered goes beyond personalization. It's really about sort of consistently showing up when it matters. To me, it's about meeting people at that moment and evolving with them. And at RBCX, that's always been our thesis, and specifically our portfolio companies. We have a portfolio of startups within our area here. And when we started, we were called RBC Ventures. And the mission was simple. The bank had a lot of data on our customers about friction points, pain points, points of uncertainty, moments of concern for clients that we were limited in terms of how we can help, in terms of whether that would be helping through financial products or financial services. And we knew we wanted to help them. So what we did was actually created companies to go around that and cover those problems and meet them where they were. And kind of tying to your question about regulations, yeah, I mean, in terms of when we're thinking about highly regulatory industry, specifically like financial services and healthcare, I'd say, the key ethos around that is that regulations are there to protect people. And at the end of the day, when we design things that are transparent, predictable, and clear, that's in the same recipe. And to me, it's part and parcel with each other. Like, it shouldn't be one or the other.
Right.
And I think we should put them together.
Yeah.
And I think about that and think of today's evolution of RBCX. We have 4 portfolio companies. We designed them, like I said, around those human problems. And those 4 things are, number 1, Mido, which is helping kids and teens kind of learn about financial literacy in a real-life experiment. Secondly, we have Owner, which is helping entrepreneurs or budding entrepreneurs really register the business with confidence and clarity. Third is Houseful, which is simplifying the whole home buying and home search journey. And then Dr. Bill, which is actually simplifying medical billing for physicians so that they could actually focus on what matters, which is patient care. And being human-centered is not just creating these companies as a whole, it's really about challenging ourselves. So with analytics, we actually partner with our in-house research and design team to constantly challenge ourselves. We ask ourselves these 2 questions. Are the products that we design still helping the people we thought they would help? Or are there unintentional other subgroups that are actually using the platform itself? So I think as we continue to evolve, maybe I'll give an example, one of them being Dr. Bill. During COVID, there was actually a lot of different types of billings that was coming through the platform, and we realized different spikes and different things. And what we realized, though, was there's a lot of physician burnout as a theme. And what we realized is we really wanted to focus that on a theme is put that into a roadmap. How do we help physicians in their day-to-day lives, but specifically physician burnout? How do we automate as opposed to augment? So I think those were interesting plays in terms of the research that we got as well.
I love that,
But yeah.
especially around the regulatory, the risk, and the compliance. Like, I agree, putting it into the scope of a framework that's joint is easier, because otherwise I feel that most companies kind of deviate from it and we forget it, and then it's an aftermath. Yeah. Sagar?
Yeah, I can just add that at times the human-centric experience is not digital. So you do not always have to fit in digital into all the context. It's about meeting the client or the user where they are. So some of the things that we've been doing, and I'll give you a bit of a background of SimCore. It's owned by 3 of the biggest banks. We do a lot of work around communications. So imagine we are Canada Post's biggest client. We send the most mail out there. And of course, you would say the Canada Post is dying, so mail is dying. Well, we do analysis on what happens when a Canada Post strike happens. And what we see is that, yeah, there's a bit of a lull. People do not see the paper. But then people start seeing their e-presentment statements much more. So what we are seeing is there's a cohort of double dippers that is coming up, which is they use the print, they use the electronic also. And what we find when we talk to these clients is that they're not looking to switch the context so rapidly. While digital at times, for some clients, is seen as the cattle class, that you're just pushing me into this thing because it is cheaper for you. Hey, RBC, you make so many billions. Yeah. Why can't you spend $2 on a letter to me? That is where the clients are. And that is what we need to recognize. So multiple occasions in my career, I've seen that at times the answer to personalization and humanization is actually bringing the human in, bringing that fresh thinking in, that it is not always digital, it is about the CX, and making an edge happen with an all-comprehensive view of where the client is.
Love that. It's definitely meant to be intentional and purposeful, right? You're not just building for the sake of building, but really building with some kind of impact in mind. Okay, so as a follow-up, is there a moment where you saw that human touch make a measurable difference in trust or engagement?
For me, or?
You can go.
Either of you guys.
Yeah, I can talk about my experience with RBC Direct Investing. So it's the country's second biggest online brokerage. And there's always this need for scale. And we were doing everything digital. And there was a plateau that we were hitting. Some of our most important clients, they were not resonating with it so much. So what we ended up doing was we created, we always had a Royal Circle kind of a membership, but then we created an elite group of agents, human agents, who would engage with these digital investors who are not typically looking for any engagement with an advisor or whatnot. They're very comfortable doing things online. But what we found was that it was becoming imperative for them to talk to the human, because in this case now it wasn't hundreds of thousands, it was millions of dollars at stake. They were looking for the speed. At times they were not getting the speed, and just talking to the human would bring in trust. And we could also see that the feedback loop improved instantly. So we were no longer guessing and letting them answer those 20-minute surveys to see how we improve. But we were seeing how our most important clients needed to be treated, and we would make product changes also accordingly. That's one example, and that program has done really well. It has grown across the regions, and now, yeah, the product is flourishing as a result. Yeah.
Anything to add, Alex? Or?
Yeah, I mean, maybe one example tying to sort of the feedback loop and trust. At Dr. Bill, when we first established the company, it was a lot of tying to, like I mentioned, billings for medical professionals. What we found over time, though, was because they realized our connection within RBC, there was more and more questions about, hey, what should I do with my finances? And at the time, we weren't set up to really answer those because we were here just specifically to help you with medical billing. And I think what we learned over time was that we've earned that trust. And because of the products that we've developed, that we've earned the trust and the right to actually help them navigate what could be potentially a complex system of different products, different services. And they lean on us for that. And because of that, we've started developing more human-centered interactions with our clients, with our physicians, so that it simplifies the whole process. Because of us helping you, we're then able to help you figure out from the bank perspective, what are things that make sense for you. Yeah. And that really is something that we hold dear, because we want to make sure that it's right-sized as well.
Awesome, thank you. So trust in digital channels can be built slowly and lost instantly. How do you define trust in a digital environment, and what are the most effective ways you've seen organizations earn and sustain it? Let's start with Sagar.
Yeah. So before I define it, I would say trust is almost like air. You're all breathing it, but you're not worried. It is an endless supply almost. It's clean. But think about COVID. The same air that we trusted, there was a breach in trust, and everyone was out with masks, people not even stepping outside. Everything slowed down. So trust to me is equal to transactions. You make money if transactions are happening. If there's a breach in trust, you lose the client, but you lose transactions also, so everything slows down. So critical thing. In my mind, as a product leader who has gone through multiple areas of data, I would say that there are three fundamental things that we have to do. So one, which I call the spine of any system, is that are you holding my data securely? Can I trust you to do that? And that takes literally years. Glitch-free, thankless job, but critical, and you have to make so many investments, and you have to rein in your impulse to innovate at times because of that. So that's the first, the spine. Are you just saving it well? Then the second element is, are you serving it well? Most of the times in financial industry, data is the experience. In investing, for example, data is your client experience. Other than some buttons and whatnot, data is the key thing. So are you doing it well? And how are you doing it well? So if, let's say, that second one is your heart. Are you serving it well? Are you making my experience well? Then the third one is eyes. So your eyes become that you have so much data, RBC, TD. You know about me. Why are you not serving me well? As a product leader, are you really understanding what my evolving needs are? My cohort's evolving needs are? Are you bringing that cutting-edge thinking before you invest in the roadmap? I think these three things, the spine, the heart, and the eyes, they're super important for us to keep gaining that trust that, yes, we will do the right thing and come up with the right products and make sure that the clients are using them, and then we are saving them. The data is being saved. So that, to me, is the key thing, and that's a holy grail that I've seen work across roles. If everything is happening, it's good. The moment there's a breach, and luckily the places that I've worked at, we haven't had these breaches of trust either in saving and whatnot. But what I've seen is with competition, I have examples right now where we see that some of our competition is not able to save data in a good enough way. So there are breaches happening in their data security layer. That's an opportunity for us to gain market share.
Awesome. Alex?
Yeah, I think the only thing I would add is trust from an analytics perspective. It's all about why we're using the data as opposed to just how we're using the data. And I think, like I mentioned earlier, outside of personalization, it's really about predictability and that consistency. And I think for finance and healthcare and space, a lot of the predictability comes through reliability. And as long as you continue to be consistent, reliable, and your clients understand and realize why you're helping them with this data, then that trust is gained. And
right.
to your point, it's very easy to break that trust, and that's why we hold that very, very strong. I love your analogy of the human body in that sense. That's top of mind for us as well, like how we're using it and why we're using it.
Yeah, that's great. Great points. So I have a follow-up to that. And Alex, we'll start with you. Are there particular analytics or customer signals that you look for as indicators of trust or erosion of it?
I think we try to put metrics across the entire life cycle of the platform, whether that be from the registration funnel, all the way down to engagement. I think from a metric standpoint, we look at things like retention. We actually look at, depending on your business, like if you're more of an engagement sort of product as opposed to just a subscription, we'd want to see that constant engagement over time.
Yeah.
And with the luxury of some history of data, we like to see the consistency of that. Where we see people dropping off, we start seeing, hey, are there fragments? Are there friction points along the product that's causing that? Outside of that, we also do we have NPS studies and we have research studies, like surveys that we just constantly go out and just make sure that whatever we're building is consistent and still serving that.
Right. It's all about the numbers and making sure that it transitions and translates into insights and information that you can utilize and figure out whether the trust is really cemented.
Yeah.
How about you, Sagar?
Yeah, similar. I would say your biggest metric for trust, and that goes to the I's, which most of the organizations fail, is around are people staying with you. So SimCore, luckily, we've had an over 99% retention of clients, unheard of. But that's because we are B2B mostly. But in my B2C work at RBC, we had the challenges come up, folks like Wealthsimple and whatnot. You tend to lose clients if you're not you're not analyzing the data for the cohorts that you're serving, you're not creating the experiences, pricing strategies that meet the needs of those cohorts. Of course, you have to keep the business context in mind. But when you fail at that analysis, that's when the client starts feeling they are not in it for me, they are in it for money. And that is where the trust erodes, clients defect. Otherwise, we have seen that for the same challengers, there's so many clients of these cohorts, the younger cohorts, they stay with the bigger banks because they trust that something that the bank is doing is actually the right thing to be done.
Right.
So that's where I would say that the trust erodes, revenue erodes, people leave.
That's a great point to my next question, which is data can be a bridge to trust or a barrier to it. So how do you balance using data to drive business growth while ensuring transparency, safety, and customer consent? Let's start with Sagar.
Yeah. So I can give an example where we were faced with this issue that on the product side, you always make business cases. You have to get funds. The business case has to be solid for the funds to be released. And then you have to show traction that you are actually achieving, because it is about your own credibility and trust within your executive circles. We launched a product, and I'll not go into the product details, but one of the things that we ended up doing was that we were aggregating the client data, or there was a feature with which they could aggregate client data across all the banks using one of the aggregators. Yodlee was an aggregator. And the product was being sold through our advisors. We had some sway over advisors, how they would behave, how they would act in various situations. And early on at the product launch, we had this metric around how many clients are aggregating their data. And we felt that there was almost like an extra push being given to not only that Yodlee aggregation, but even otherwise overall aggregation. At times, the clients would not know that they're signing up for the product that we are going for. And very quickly, within a couple of weeks, we could see that this is not going the right way. Like, we may meet our metrics, but we will end up eroding the trust of the client.
Right.
So we rolled it back very swiftly, and we could see that it wasn't by itself, it wasn't as successful, because Canadians did not show an appetite towards aggregating everything. Then we dug deeper into it, and we found that Canadians actually bank with multiple banks because they do not want their advisor to see the full picture. The whole premise of the product was to see the full picture. But Canadians wanted that, okay, whatever I have with you, you give me the full picture of that, and I am not interested in giving you details. I'll give you high-level numbers, but I do not want you to be screen scraping and getting data and whatnot.
Right. It's a fine balance.
It's a fine balance. So what we have learned from that is that consent is very critical. So now at SimCore, the work that we are doing on open banking, consent is one of the first things that we are keeping in mind, and it'll create the same kind of a reality without any screen scraping and whatnot. And it is being done in a very ethical way, and no inadvertent breach of trust there.
Right. Alex?
Yeah, I guess with us at RBCX, we're known as the innovation and tech arm of RBC, but we're not known as that because we're innovating at all costs, or any costs, or growth at all costs. I think for us, it's growth with purpose. And a lot of it starts culturally. Like, each of our portfolio companies that we have, we talked about the life moments that you're kind of touching upon, but anytime we design something, we think about the value. Is it a value just for us as a company, or is it a value add for the end user as well? And typically, when I come to analytics conferences, people always ask me, well, how do you measure value? I have a framework that I stole. I didn't steal, but my old boss had shown me before that I love to keep using. It's two components. There's value you support and value you create. As you think about the things you're building for clients, you can think through those two elements as well. From a value you create perspective, it's a direct value. So for example, Dr. Bill does these auto rejection kind of fixes for physicians. That's a direct value. Then you have value you support. With Mido as an example, we're helping create environment to allow teens and youth and young adults to really learn about financial literacy. So that's something we're empowering them with. We're not directly driving it, but we're creating an environment to allow for that. So I think with these ethos in mind, it helps us to really ensure that when we grow, it's not growth at all costs, it's really growth with an intent.
That's very interesting. So have there been moments where you had to intentionally slow down to protect trust? Let's start with you, Alex.
Yeah, for sure. I would say it was interesting. Okay, so I'll use Owner as an example. I'll try to mix it up a bit. With Owner, it's really about signing up businesses, entrepreneurs, getting them confident. At first, we had a hypothesis that a bunch of these were actually founders, that were tech founders that setting up the business. But what we learned during COVID was a lot of actually side hustlers who kind of wanted to formalize their business. So from that understanding, we have to kind of pause for a second, because we're coming up with new features, new things out there for founders, tech founders. But we realized we had a whole other persona of folks using the platform. So wait, hold it, pause. Let's try to learn who these people actually are and what they actually need before we just start building just for the sake of it.
Right.
And I think that pause allowed us to internally think about that and design something that was more, inclusive for the entire group.
Yeah, it kind of goes back to the point that I made earlier around AI is not about, it's not a race to do as many experiments. It should be a race that's focused on learning and growing and evolving. Sagar, how about you?
Yeah, I think I started with that example itself, that we slowed down on that initiative. And there have been other instances where, again, it comes back to the eyes. There have been rollouts that we have done and then rolled back because they didn't sit well with the client. Mm-hmm. Not always because there's some ethical issue, but to me it is ethical if you've taken a stance and the stance was really not well thought of or did not prove to be right. Then you have to have the gumption of saying that the data is saying that we are not on the right track. For example, at direct investing, we started deprecating the watch list feature. And we soon started getting an understanding that this is becoming a major client concern. So we rolled back whatever changes we were making, brought back watch lists as an important feature. Cannot speak to anything right now because I've been out of that team for a few years. But that's the way to roll, that you go out there, you experiment, you learn that something is not sitting well with your clients, and you listen to the client. I think that's important in terms of data leading your decisions and you retaining the trust.
Awesome. So when you're building business cases for CX investments, there's always pressure to deliver fast ROI. But trust, loyalty, and lifetime value take time. How do you frame that conversation with leadership? And what metrics resonate most when advocating for long-term customer investments? Let's start with you, Alex.
Awesome. Yeah, this is actually a question near and dear to my heart because my former background, I worked in cap markets and portfolio management. And as your question says, like a lot of us focus on the short-term ROI. What's in it for us and from that perspective. But because of that background, I've learned how to focus and anchor on long-term value for clients in terms of how do you portray that to key stakeholders about basically how we show levers. There could be short-term levers that we demonstrate that will actually achieve the long-term goal. Yeah. Sometimes these are out of necessity. Sometimes these are out of the goodwill on the side of things. I would show one example, Mido with the youth and young adults. We know that they're kind of expensive to acquire because there's so many different options out there. But what we learned over time is using the data as well, and kind of the advantage of RBC's long history of data is we can track customer retention. Like you mentioned, how many customers actually stay on your platform. Mm-hmm. So we can actually predict, based on people that actually stay with us, stay engaged with us, what is that long-term value that they can bring for us. Now, of course, we say short-term, probably not high profitability, but if we're engaging them in a meaningful way and new ways to keep them sticky, you'll actually achieve that value further out. How much is that value? We're able to quantify that as well and actually put that in front of folks. And I think that helps change that story a bit in terms of what is actually tangible. And then on top of that, we demonstrated different levers that you would need to achieve in order for you to get that. So there is actually elements of short-term levers that you focus on, whether that be month-to-month retention, value per retention, like dollar per user on the platform, et cetera. But those short-term levers actually help answer the long-term piece as well. So
Right.
yeah.
Like having the short term feed into the long term, I feel like help with the stickiness of the idea. So those are great points. How about you, Sagar?
It's a very tough one. Nobody's interested in the long term.
Yeah.
I'll be very candid.
Especially now because everything's changing so rapidly. Right?
I've never seen anyone being interested in long term.
Yeah.
And because everybody is being assessed on this year, if not this quarter. I was talking to George, my buddy from Simcor, that it's an existential question for most companies. When you are a conglomerate, there are ways that you can unleash the power of the ecosystem. If, let's say, your long-term strategy is to gain a certain cohort, you can look at which other part of the organization is doing well with that cohort. How can you make synergies happen? You gain the attention of that cohort towards your product. If you are a monoline, it's very challenging. You can use some ecosystem players again. You can work with external partners to do those kind of things. But what I found is that doing smaller pilots,
Yeah.
POCs, proving it out with real data at times helps. And then again, it's about keeping your own credibility with your executives so that it's the long game.
Right.
Sadly, even though it is short-term gains people are looking for, you have to play the long game. You have to know where your client is going to go. You have to take that bet and repeatedly prove with your executives that you're fine. So these are a couple of things that I would say, but otherwise, I started with making these inflated business cases because that's the only way you get funding, but I found that that's not helping in the long run.
And I think what you just said is key, right? Like you should be much more clear in terms of your short term, because
Yeah.
that's what you're trying to implement and conduct a proof of concept to
Right.
prove some kind of impact. But you gotta keep your eye on the prize and have some idea of where it's going. Maybe not as detailed as the short term,
Yeah.
but I think it's important, especially when you're trying to convince leadership up at the top, right?
Absolutely.
All right, so in financial services, especially customers interact with brands during life's most vulnerable moments, job loss, illness, transitions. How do you design digital experiences that respect that emotional context while still being efficient and automated? Alex, let's start with you.
Yeah, for sure. I mean, I think this goes kind of back to the theme of empathy. Everything that we designed from each of the different startups, like once again, Dr. Bill, there's a lot of physician burnout tied to that. Physicians finish 12 hours of a shift just to have to go back and start billing, right? And we really want them to focus more on patient care.
Yeah.
So these are very emotional elements that are triggering across the entire life cycle. So we try to think of when we should be able to communicate and when we should pull back. I think that's a big thing of deciding, like, when do we actually communicate, over-communicate, or when do you kind of pull back and under-communicate?
Yeah.
There's a quote that I might butcher right now, but essentially empathy is not just knowing when to show up. It's when to not show up as well.
Yeah.
And I think that's a big thing of like showing restraint in analytics as well, of when we should be going out there and telling the right message.
Yeah, totally. I feel like part of empathy is also just being transparent. Like people don't feel like you really care about them when they feel like it's done to them, but you'll get much more impact if it's done with them and everybody is kind of joining along the ride.
Yeah.
Sagar, how about you?
Yeah, I hope you guys can still hear me.
Yep.
Yeah, I would say that again, it goes back to the heart of the using data to serve a very efficient experience all along. That's table stakes, especially when people are in a tough spot. They want a very intuitive experience. You can only create that if you've been listening to your clients well. And this whole notion of younger people, older people, I think we all know that's the most archaic way of looking at things. The right way that we feel of doing things is that start with a lot of data analysis, create your clusters around how people are behaving. Then do some ethnography, understand why people are behaving the way they are behaving. Create your client experience well with that understanding so that it is a smooth experience all the time. Now, when it comes to very vulnerable moments, well, we have found that even though we've been in very digital experiences, bringing the human in is critical. So have a smooth experience, maybe AI-driven chatbots and whatnot to smoothen it, but then having that human backup is critical. Because there's no way that you will have a person who's, let's say, looking for estate to be settled. They do not know anything about probate. If you say that, okay, my FAQ will help them, we are all being delusional here. So having the human there is critical. That's what I would say, that experience is not always about digital, but bringing the human back in.
Thank you, Alex and Sagar. This has been a very insightful conversation. If there's one message I'll leave you all with, it's that data builds insight, but trust builds loyalty. The future of CX will belong to those who can balance both with transparency, empathy, and purpose. And it seems like you two are doing a phenomenal job where you're at. So I'm going to end over here. We have like 10 seconds. We can maybe take one question if anyone has anything that they want to ask these smart individuals. No?
Cleared
Shy?
all the doubts today.
All right, well, round of applause for you guys.
Thank you.
Thank you.